Hi, it's Peter Young here. Just doing a quick little video on how to save money when you're purchasing mortgage insurance. First of all, congratulations on the purchase of your new house. This is an exciting time for you, and buying a house is one of the biggest investments you're ever going to make in your life. So congratulations. But with that being said, since it is one of the biggest investments you ever are going to make, a lot of people want to make sure that they insure that investment just in case, God forbid, one of you were to pass away over the next 20, 30 years, however long your mortgage is. You want to make sure that the spouse that's left behind is able to stay in their house and be able to afford the payments. And that's what basically mortgage insurance does. Over the next few weeks, you're going to start getting a lot of things in the mail from different companies offering you mortgage insurance. And I'm here to help you sort out the different types of offers a little bit and tell you a little bit about it because people don't realize that there's a lot of differences. It's very confusing when you get all these different offers, and how do you know which one's the best one for you? Let me tell you about a couple of pitfalls that some people fall into. First of all, this is just an example amortization of a 30-year mortgage for $225,000. It starts off with a balance of $225,000. So let's say with the type of policy that I offer, if you were to get a $225,000 30-year term policy, you would get $225,000 if one of these spouses were to pass away in year 1, year 10, year 15, year 30, whatever. You would get that amount. Now, some companies, and this is where people can basically pay more for than what they're getting, are what are called declining balances, okay, insurance. And what that is if you see on the graph here, around year 15, the balance is down to about $160,000. So if you were to pass away in year 16, you would only get $160,000. You wouldn't get the $225,000, and you're paying for the same price. So, which would you rather have? The $225,000 or the $160,000? It's a difference, what, $65,000? Which one would you rather have, huh? I, I bet I know the answer. Another type of policy is what it does is it doesn't send the money to you if one spouse was to pass away. It sends the money directly to the bank, okay? And then they pay off the mortgage, and if there's anything left over, then they'll send you the difference. However, what I prefer is the money goes directly to you. That way, you can do with it as you see fit. If you want to invest it, if you whatever you want to do, I prefer the kind that goes directly to you. Right decision, wrong decision, how do you know what to do? What's the best deal out there? That's why I'll help you sort this out. Anyways, this is how I typically work with my clients and how it would work. I send you a link. There's a site out there. It's called join.me. And what I do is it gives you a code that I send you on an email or on the phone. And with that code, you type it in at this site, join.me, and all of a sudden you're looking over my shoulder. You're basically seeing my computer screen. So then what I do is I go through, ask you a couple questions, and it shows you through our database all the different insurance companies out there and what they're going to charge you, because some insurance companies charge you more for height, weight, different age groups. Some insurance companies prefer different age groups. Some companies will write policies for people with diabetes, others more shy away from it. I help you navigate through there, okay? And you can see it all right on the screen. See that you can actually see that you're getting the best deal. Another thing you can do, and a lot of people like to do this, is do it yourself. And basically, what that is, people say, "Oh, gee, I can go online, and I know I've seen these things, get a quote online." This is the problem with that, though, and a lot of people don't realize this too. Is when you go on to some of these sites, they'll ask you for your name, your address, your age, your email address, your phone number, height and weight, and they say, enter all this information. You're going to get an instantaneous quote right away as soon as you hit the submit button, okay? What happens when you hit the submit button, though? After you go through, you fill out the entire form, that's when they basically send you an email, or on your screen you're going to see a big sign saying, thank you for all your information. An agent will be contacting you shortly. And basically what these companies are lead generation companies, and they get leads for insurance agents, and then they turn around, they get all your information, they turn around and sell it to agents to call up and give you quotes. Okay, which sounds great. And I tried that one time when I first started writing insurance. I thought, gee, people are sending in their information, they want quotes. I'll take care of them. I started calling people up, and everybody's getting angry because these companies sell them over and over and over. And I'd get people saying, "Well, you guys stop calling me," that sort of thing. So, anyways, you just got to be careful with some of the online sites. Okay, so if you would like to schedule an appointment, and seems like my phone number is a little messed up on the screen, just call 1-800-233-8541. Again, 1-800-233-8541. Or if you want to schedule an appointment, go right into my appointment book. You can go to meetme.so/Peter Young, and you'll be able to put an appointment right onto my calendar. So I hope to hear from you soon. Thank you.